Alright guys, this is going to be the fourth and final take I take on this cup and handle pattern video. And if we don't get it this time, then we're just going to do a live stream on this, okay? So let me explain how a cup and handle pattern forms, okay? We're going to start off with that. So, even before we start with that, let's explain why this is the most important, in my opinion, during the bull run. It's because you're going to see sustained rises in price action throughout a bull run, and that's what leads to creating this pattern ultimately. All right, so the left part of the cup occurs pretty much from an uptrend and price action on an asset. All right, and so that's what happens to the bull run, and this also is likely why you don't see them too often in the bear market, which is why we haven't seen these too often in the last year and a half, 2 years or so. But you can see these all the time in the bull run. And now look, I am not a chart trading patterns guy anymore. You know, I'm a more advanced technical analyst, and I often like to counter trade these. Why I'm giving this information is because you understand that these are more often than not looked as breakout points, okay? But they are faked out and faded. You know, this does happen. Matter of fact, this just happened today on Bonk, as a matter of fact. Okay, we had this, you know, it was a slight breakout. We did catch this, but ultimately not a real breakout. Look what has happened now. Price retraced more than a third of this cup height. So it's really, the pattern's invalidated now. It really is. So I'm just saying, these don't always play out. Just be aware of what they do. Let me continue. So the left part of the cup, seen right here, the high, is made from a sustained uptrend in price, okay? So this bottom right here, the cup bottom, see, this forms after like a gradual decrease in price, okay? And this period is just consolidation, you know, establishing a fair value for an asset, all right? And so basically this bottoming phase can take any place over the course of weeks to months to, I've seen upwards of a year, you know, like or more, you know, when you'll see this on like assets where people have just forgotten about them and they've just gone sideways for a long time. Then ultimately price will start to make its way up to the top, and now we have ultimately another sustained rise of the price occurs later down the road, and it takes us right to where previous highs were, or just right at it, you know. So I want to talk about this. After these two highs are made, the most important thing we can do at that point, and we can see this, I want you to be able to identify this pattern here. And once you can see this, your first thing to do is mark your top of your cup line with a trend line, and then ultimately put an alert on it, okay? And I go a step further. I will go from the top of my right high, and I will measure down 4% and set myself an alert. Then I'm going to measure 2.5% down, set an alert, and then 1%. And I just like to, I'll have 4 alerts set for this. That way I don't miss this, okay? You'll see I have these 4 alerts set. So when these alerts go off and price comes back up to this level, what am I looking at? Okay? And actually, see, I'm skipping ahead here. I want to explain when price action comes up here the first time. What this phase is called the handle formation phase, okay? And so ultimately, I guess textbook wise, they generally want to see a downward consolidation, which is like a bull pennant, essentially. It's the most bullish form of consolidation, and it's very common to see a decrease in volume and as this occurs. It can also go sideways, you know. It doesn't have to go downwards. But this handle, see right here, as you can see perfectly, this is a handle, and here's our cup. And so this occurs, and price ultimately comes back up to this level and retests it. Now, how do we trade this, and what's the most important thing to do once price gets back up to this level to retest this? Volume, volume, volume. Volume confirmation. If you don't have exo charts or a depth of market indicator, this volume indicator is totally fine. I can assure you, it really is. You want want to move to the lower time frames when this happens, and I'll just go ahead and show you this right here. Sorry, let me back up. One second. Now, zoom in right here. Sorry. Okay, you can see right here, low volume. Okay, low volume. Volume decreases at this handle, right? Well, what happens? We come to the upside and look at this candle. Boom. Bullish volume comes in. Further on up. Again. So really, the confirmation is volume. And so, but with reading order flow, it's much better. But you definitely want to have the volume confirmation, and it should be a massive surge. It should be quite a quick rise to the upside. And now, here's where I stumbled upon in my earlier videos, because I'm trying to compact it all within a time period, and I'm done trying to do that. I'm going to just cover everything on this, and so I may skip around. So I just explained the most important thing is to watch for is volume. So watch the volume. How do we trade this? There's a few ways. I'm going to give you the 2 ways. We give you the aggressive way. The most aggressive form of entry is literally if this breaks above this line, we enter on a long. Now, advanced traders and people like myself, that's not me calling myself an advanced trader. I'm just telling you what I do. I like to counter trade these patterns, okay? Personally, but this is the bull run, in my opinion. In my honest opinion, with the rise of XRP and all this, I believe this is the start of a bull run. And we're going to see where breakouts are going to be more and more occurring. You know, we're not going to just be able to short the tops of these moves. So we have to either go with the trend or analyze this in real time with order flow. Now, my recommendation is with that aggressive entry of just a break of the trend line, you have no probability, no way of knowing if it's going to go up or not, or if it's going to be a fake out and we slam down to the upside. So my personal favorite entry is monitoring order flow. When order flow will tell you everything you need to know about, you know, if you're in depth at reading order flow, which I mean, I pride myself on being very good at reading order flow. That's all you really need to know is if order flow confirms this bullish move up, we enter. Okay. Now, what in my opinion is something for a trader who doesn't know how to read order flow is a backtest entry. Of course, a backtest is always nice to see this come through and give us this backtest maybe like a couple times, and then ultimately more volume comes in. People recognize that, oh, we're above this level, and now we're off to the races. Backtest entries are great, okay? But the only bad thing about that entry, it's not always given to you, okay? You're going to see that these patterns occur all over in the bull run, and you have to just be aware of them. But in my opinion, this is the most important pattern in the bull run because this is where breakouts, in my opinion, occur the most often. And look, they don't have to be rounded bottoms. They don't have to be perfect. I don't care what the textbook tells you. Look at this one right here. Look at this. It doesn't have to be perfect. Okay, I have another example for you right here. Let's take look at Bitcoin Cash right here. Okay, check this out. Oops, I'm sorry. Look at this. Okay, this high. Look at this consolidation period. So price made its way back up here, and guess what we're forming? We're forming this handle pattern right here. Now it is important to note that this is what they say. They say this textbook wise, if it retraces more than a third of the height of its cup, the pattern's invalidated. I find this to not be true. Trust me, I say this, when price action does ever get back, let's just be hypothetical here. Price action goes all the way down here. Let's say 5 years later it takes to get back up here. This will be the last two highs that they have to contend with. When it does reach this level again, if a volume confirms it and people see this, they recognize this was the last two highs, it will still make a breakout. So I don't care what people say about a pattern invalidating. Maybe they're just talking about for the moment. Regardless, see, I'm trying not to get all over the place because I'm not especially good at teaching patterns because I was once a pattern trader guy, but I've just put all that out of my mind and I just can see them very well now, and I know how to trade them. But I think I've covered everything. But I feel like I'm forgetting something here. Oh yeah, let's talk about the measured move. Let's talk about how we can get an idea of how far an asset can go. Now, look, this is all hypothetical because I'm going to go by what the textbook says. Textbook says you take the bottom of, essentially, I'm not sure if they talk about going from the body of the candle or the wick or not, but essentially the lowest part of the cup where it's formed up to the cup line right here, and then you can then essentially copy and paste that, and where your cup line is, you can just add that, and this could be the measured move. This is how far we could essentially go. Me personally, I am more of risk averse. I like to protect my capital, and I like to measure. This is not a popular opinion, and I'm gonna tell you, and people don't like when I do this, but I love when I do this because it makes me take profit sooner. I like to measure from the highest point of the cup. I know it's crazy. So essentially that'd be right here for me, okay? And so this would give me my measured mood of like way less percent. But in the back of my mind, what I'm doing is just tricking myself to taking profit earlier, rather as opposed to this was right here, Regardless, it's not a science, not an exact thing. That's just how you quote unquote measure the move. It's not always accurate, and definitely can occur in, and more often than not you'll see that it's not always perfectly respected. But make no mistake about this, guys. These occur all over during a bull market, and you can see this is what causes price to come up here, and this is going to do the same for that as well. Bonk, look at bonk before this. That's not supposed to be there. Sorry. This is right here. Actually, yes, it is. If I zoomed in and explained that more in detail, you would see that's why that did that there. But I'm not going to go into detail because I'll need to go to lower time frames. So I think I covered everything. I'm trying to think. Yeah, don't worry about these, I'm gonna call them nerds. Stupid. These nerdy chart patterns, chart trading pattern guys tell you the volume must be doing this and that, and it doesn't matter. The only thing that matters is at the breakout line, is there a massive increase in price action in green volume that indicates yes, buyers are interested. I'm talking like this right here. You see that big green candle right there? Let me make this more obvious for you. If you can't see this, this is what we're looking for. This is what we're looking for. Just don't have to be that massive, but if it's weak, as you see right here, initially, you see this weakness. Look what happened. We had a little bit come through, but not nearly enough. This candle ultimately turned red, came back down. But we did make 60% off this trade, as you see in my last video. Ultimately, though, not a true breakout. So with that said, I think that's everything, guys. I'm pretty sure that's everything. Yeah. I told you about setting the alerts, being aware of it, and yeah, I'm pretty sure I can go to just about any. And look, it doesn't have to be a cup, guys. Okay? It doesn't have to be perfect. Just know this much. Know whenever we retest a level of price action at its highs, essentially, like, look, we can use this. I can promise you this. Do you see this right here? This right here. When we break above this, if we come back up and break above this, we're going to see a nice uptick in price action, because the rounded bottom, V-shaped bottom, it doesn't matter. Okay? It doesn't matter. Ultimately, you need two highs 1 point prior, and when it gets up to it there, a period of consolidation, preferably downward consolidation, the most bullish form, and then price going to make its way back up to this level. Okay, when it does, our alerts go off. We open up this up, look at our volume. If buyers are interested, and again, like I said, me personally, I'm going to open ExoCharts and watch the order flow as I showed earlier. And if I see open interest coming in and price going, open interest up, price going up, that's new longs coming into the market. And boom, massive uptick in delta. I'm entering, but don't get faked out. Don't get faked out. Really take the time to understand and master this order flow and reading it. Because I'm gonna be honest, your boy's got it down. I'm reading this like a book right now, and it really feels like reading. It's not even hard anymore. I don't even think about it, and it's been paying massive dividends for my trading. So I highly suggest you all take time to understand a reading order flow. With that said, I would not recommend trading these patterns with any kind of leverage more than like 2 or 3x, even then, because you can expect big gains on this. You can expect big gains, like we're talking like 10 to 20% or more gains. We're talking like big volatility here, okay? And you're gonna need your price gonna need to be able to retrace and come back down and move up before ultimately finishing its full move out. And if you're on 50x or something like that, you're gonna get chopped up. Okay, just be careful. And I guess our fourth take was a charm. I'm sure this is like a super long video, but I'm not making another one. And I know it wasn't very it's definitely not structured. This is the best I got for you guys. Okay, I will go over triangles and head and shoulders and inverse head and shoulders, and that'll probably be over the course of 2 videos. I'll tackle triangles with one, and then IHSs and head and shoulders the next one. In my opinion, those are the only patterns you need to know and understand how to trade them. Okay, that's it. Good night.